Today, we're gonna get a little bit. I hope it can be very interactive. Ask questions. Please give me some feedback. Ultimately, we won't spend too much time on it, but ultimately, it is going to be to highlight a program that actually was already introduced to us, as Peter shared a real life example about a month ago. But I do want to highlight it. Okay, so I'm gonna bring up a cheesy chart. Okay, just bear with me. But it's just to highlight some of the elements of this file. Okay, so here it is. Okay, you guys see it? All right, so here's a scenario. It entails a mom, daughter, and son. Okay, if you guys want to jot this down, take a snapshot of it. Okay, I want to spend some time, so you guys go ahead and feel free to unmute all your speakers, okay? Because I want this to be interactive. So here's a scenario. Here's a mom. Her FICO score is about 690. She owns a primary home free and clear. Her property is worth about 2.2. Okay, $2.2 million. It's free and clear. Her income, she only receives Social Security income, $2,000 a month. Okay, that's mom. Daughter owns a house as well. Her FICO 624. Okay, she owns a primary. It's worth about 1.2. I didn't add in here loan. It doesn't really matter, but loan's about 800 or 800,000. Okay, loan is about 800,000. Okay, again, it's not really important, but I'll put it in. All right, and she makes a decent earning here. Yes, I did say decent of $180,000. Okay, in California, it's decent, not great anymore. Son has about a 680 FICO score. He owns a rental property. The value is about $600,000. Oh, and I forgot to mention that his loan is about $300,000. Okay, it's about $300,000. Okay. He also owns a business. He owns both the land and the business. It's a gas station. The valuation is about $2 million. I'm being conservative there. He has an SBA loan, and a private loan. Sorry, there you go. A private loan of 650. So a total loan balance of 1.3. Okay. His income is really irrelevant right now at this point because his taxes are doesn't show much income. Okay, so this is a scenario here, and I know this story is, I'm sure, sounds somewhat familiar to some of you because I maybe brought this up about a month and a half ago now. Okay, and it's going to tie into something that Peter shared with a client of his from Canada. Okay, so now knowing this, knowing the variables, here's a story. The son is being sued by his former partner in business. Yeah, don't ever get into business with your friend. Just kidding. His attorneys told him to offload everything. So they have a court date set in March or February of 2025, in a few months. His attorneys straight up told him, offload everything. Okay. Obviously, the son has what? What kind of properties does the son have? I want to see if you guys are paying attention. What does the son own? What are his assets?
The gas station, land, and rental property.
There you go. Bingo. Okay. So he owns a gas station, the business, and the land, the commercial property, the commercial land, and he also has a rental property. Okay, just an SFR in the city of Norwalk. Okay, it's about $600,000. The loan amount is about $300,000. That's the part I didn't write in there. The loan amount $300,000. Okay, so now when you look at this, guys, he's asking his mom and sister to help him out, help bail him out, right? Because the son needs to offload these properties. Do you think he's going to sell it on the market or sell it to a friend? Would you want to do that? I see a lot of shaking heads. Yes, you don't want to do that, right? These are real property. You want to keep this, at least keep it in the family name. So obviously he wants mom and daughter to help out. Now let's look at mom. Mom, just by way of looking at one element or one variable here, do you think the mom can help out? Yes or no? Why no, see?
She doesn't have enough income.
There you go. You guys got that, right? Pretty easy. You guys can spot it like that, right? She just doesn't have income, right? And without income, it's very hard. Now we're going to circle back to this. Now, let's look at the daughter now, okay? Here, I should have been more thorough about this. That 200,000, okay? And I do apologize. Yeah, I should have been a lot more thorough. I didn't think I was going to refer to this, but that monthly payment is about $4,000, $4K. Okay. So I'm going to go ahead and add the debt. Okay, mom has no debt. Okay, now when you look at the daughter, just forget everything else. Look at that orange, pink column, whatever that is, the middle one. Just by the simply looking at her variables there, does it look like the daughter can do anything financially from a loan mortgage standpoint? Does it look like she can do anything? Hyuna, let me ask you. Does it look like she's going to be able to afford anything, buy anything? Just by the variables that you know right there.
No. Maybe yes. With
Maybe
her
yes?
income. With her income.
Her income, okay. Anyone else? Anyone else want to take a crack at this? Anyone? No? All right. If you just took an estimate, okay? Even if the rate is 3% or 4%, what's roughly a mortgage payment on a $800,000 loan? You want to take a wild guess? Just an estimate.
6,000.
Yep. 6,000, that's a good one. Anyone else?
Just the mortgage, not property tax and
No,
insurance.
everything. Mortgage payment, PITI.
You said 3%?
Yeah, go ahead and use 3%.
I would say it was about 4,000.
4,000. Okay.
4,000, 5,000.
Okay. Anyone else? Paul, you want to give it a shot?
Yeah, I would say like 5,000.
5,000. Good. Yeah. So her payment is about $5,600. Okay, $5,600. So good. All right, we're on the right track. Now, knowing that this is $5,600 plus they have monthly payments of $4,000. Okay, this should be easy, guys. You really have to put on your loan officer thinking hat, right? Do you think this daughter can really qualify for much at all?
No.
No? Okay, how are you getting the no? Someone vocalize or verbally tell me how you're getting the no right now.
I see her income is about what 15,000 a month,
Bingo, okay.
and that monthly that including mortgage, I think she's way over 50% on her DTI.
Great, good job, Paul. Awesome. Yeah, these are things that you guys need to just catch on right away. Exactly. So Paul said, right, W2 is about 180. Go ahead and divide that by 12. You get $15,000, right? Just on the monthly mortgage payment plus the $4,000 debt, you add those two. Let's just say it's 9,000, 10,000 divided by 15,000. You're well over that. You're well over that 50% DTI, right? You guys all understand? right? You see it right away. Okay, so now, so daughter can't really help out purchasing this. So what's probably the next scenario we can use, focusing on mom and daughter, right? Like mom has a free and clear house. She has some income. Can you guys figure a scenario where mom and daughter do something together to perhaps cash out, to pay off the debt, maybe? Can anyone think of a scenario that comes to mind here? Anyone?
Mom can do a reverse mortgage.
Yeah, mom could do a reverse mortgage. That is one option. Very good. Okay. What about when it comes to the daughter and mom? Can they do something together? Okay. So this was one of the first things I thought of was why don't we have mom and daughter, because daughter has at least a 620 FICO score, why don't we have mom and daughter do a cash out refinance, right? So because the daughter still has meets the 620 minimum FICO score, I thought, why don't we do a maximum cash out, pay off all the daughter's debt through the cash out, and because they need money right now, right? They need the whole purpose here is they need money to buy the son's business, right? So the idea then would be, hey, why don't we, mom and dad, mom is main borrower because she's on title, daughter isn't. Remember, for a cash out refinance, you need to at least have one current title holder be an applicant on the loan. Okay, so in other words, the daughter can't just do this on her own because she's not on title, right? So we have mom and daughter co-signed together. That's $17,000 of income now, right? With the mom, we take out $1 million loan, we pay off the daughter's debt, right? All $200,000. So now the $4,000 monthly debt goes away, right? It's not an issue anymore. It's not a variable because we're going to pay it off, and and we can do it that way, right? But anyone want to take a wild guess as to why that didn't work? And at 15 years of doing this, I'll admit I just forgot. I forgot this rule. Anyone want to take a guess, a wild guess as to what's the variable that prevented me from doing this, qualifying it this way? Anyone? See, can you think of something?
I'm still thinking Ragnar.
I'm going to give you a hint. It has to do with her ownership.
Is it the seasoning requirement on title for cash out?
No, kind of, but no. Because remember, mom is a title owner. As long as she is a borrower, anyone else can be added on without seasoning. Do you think you could probably take a guess? Okay, I'll give you another hint. It does have to do with the DTI issue regarding the ownership. How about that? It has to do with the DTI issue, but regarding the home ownership. All right, so I'm going to spell it out. So in order for her, the daughter, to qualify for this $1 million, there was even though we're paying off all the debt, okay, her reoccurring debt that is on the credit report here, I still had an issue with this mortgage payment of $5,600. Okay, this one right here. So what I thought to do was, hey, why don't we say daughter's gonna move into the home with mom to take care of mom, and we can set this as a rental property and offset that mortgage payment. Does that make sense? So to qualify for this $1 million loan, I had to pay off this $400,000, and I had to somehow get this payment, her housing payment of $5,600 excluded. Okay. And I thought, oh, we'll just create a lease agreement and exclude it. However, when it comes to this refinance scenario, that is not allowed. Okay, that is not allowed. The guidelines have a provision that don't allow this because the daughter doesn't live in that house. Yes, that's the seasoning requirement. She didn't live in the house, in mom's house, for at least 6 months. You guys get that? You cannot just add a co-borrower on a primary for the purpose of a primary residence and just say, "Oh, I'm gonna live with my mom, and I'm gonna set this as a rental, and go ahead and offset it with the rental income." You cannot do that. Okay, so that basically killed the deal for me. Okay, that killed the deal for me. I couldn't do this, so I was thinking, okay, what other possible way? Let me pause there. Do you guys follow what I'm just saying? Why that didn't work? You guys, yes, nod or a yes. Makes sense. Okay. Again, you cannot just add a non-occupying borrower and say that they're going to occupy it, and then just say, oh, they're going to rent their the residence out and qualify. We asked 3 different lenders, they wouldn't allow it. NMSI wouldn't allow it. Rocket wouldn't allow it. I mean, these are major players. I think Mega was the other one we asked. You just can't do it. So the question now becomes, how in the world do I get this large sum of money? Okay, this large sum of money. Forget the daughter paying off her debt now, but we need this large sum of money to help the son offload his rental property, right? And the gas station, which has a loan of $3.5 million on it. Okay. And this circles back to, drum roll, okay, Peter's scenario with the Canadian couple that was able to cash out on their property without sourcing income. So enter Change Wholesale. Okay, guys. So I'm going to share with you now Change Wholesale's, and I'm going to be honest, Peter shared that with us, about a month ago, and I was like, great, when am I ever going to come across that, right? Like, whenever you're going to come across a deal where you have to take millions of dollars out and you don't need income. Well, I did. So, what's going on here? Let me share this with you guys. All right. Okay. Is this clear, or should I zoom in? Looks okay. Okay. So let's kind of go over the quick matrix here. Okay. Change Wholesale has this community mortgage program. I cannot believe it exists. Okay. But on a cash out refinance, you can go up to 70% with a minimum of 680 FICO score. You can go up to potentially 70% of the value. And remember, if you guys, so in my scenario, mom's house was worth how much? 2.2, right? 2.2 times 70. They can take out $1.5 million in cash. Okay. Now you see the reserves. It does require reserves. Okay, but look here below in red, you're going to notice something. And if you can't, here, let me zoom in. It reads, cash out can be used towards the reserve requirements for LTVs equal to or less than 60%. So your client can have $0 in the bank, and because they're taking out $1 million, as long as it's under 60% LTV or 800,000, that cash that they're going to be receiving through the cash out refinance will suffice the reserve requirement. Did you guys hear that? That's crazy. So not only do you not, we're going to get into the income, not only do you not need income, you don't even need assets. Okay, now there's a second part to that. LTVs greater than 60% require documented assets. So my case, I am taking out 70%. Why? Because I need 1.3 and another 300 to buy the gas station, right? So I need 1.5. Now, I got the exception. It was that easy. So the AE said, look, this is like a hassle-free, no, we're not here to deny loans. We're trying to get this through because we have to. And I'm going to touch up on that too, guys. So just kind of benchmark that, the have to, okay? So they on the spot, she called me like within 4 hours, I think, and said, hey, we got the exception. Okay, so how does this work? So let's kind of go through this real quick. Okay, so to highlight, by the way, this works for purchases too, guys, right? So if you have a client who has at least 680 FICO score with 9 months reserves, they only need 25% down payment, right? They don't have to provide any income. Okay. So 30-year fixed. You can't have any mortgage derogatories, right? Your maximum loan is up to 2 million. I'm sure we're not going to go that high on these. Your assets, unlike conventional loans where it needs to be seasoned for 60 days, right? 2 months bank statements. This one only requires 1 month bank statement, 30 days. Okay. U.S. citizen, permanent resident. Okay, even a non-permanent resident can qualify for this, guys. That's crazy. You guys hear that? A non-permanent resident alien, as long as they have U.S. credit. Okay, so you can have an I-10 borrower, as long as they have some credit, they qualify for this. Okay. You can charge up to 5 points. When's the last time you guys even made 3 points or 2 points? Okay, you guys can charge up to 5. Okay. Primary residence only. Okay. There's no payment penalty because this is primary. Okay. These are the different types here. Okay, you could do condo, but condo does max at 30% down payment though. Okay, or 70% LTV. Okay. We're gonna kind of go down. There's seller's concession allowed. But we're gonna go to the income section. Okay. It says it right here, guys. This is straight from their guidelines. Borrowers who meet the community mortgage eligibility requirements are not required to provide income documentation. Income is therefore not calculated, okay, nor is it stated on the loan application, nor is there a DTI, debt to income ratio, calculated as part of the program's established reasonable expectation of repayment. Read that again to yourselves real quick, guys. That is crazy. Okay. You don't have to calculate it. It doesn't have to appear on your 1003, your application. Okay. Nor is there a DTI factored into this program. Okay. Any questions so far?
So, one quick note.
Yes.
We can originate all 11 states except, no, 12 states except Nevada state. Change wholesale is not licensed in Nevada.
Okay.
Okay in everywhere else.
Okay.
Oh, sorry. Nevada and Colorado for now.
Got it.
What
Nevada
about
and-
WMB? I know there's no income for WMB, right?
Yes, they don't pull the credit report. So WMB product and this can coincidentally work together. But WMB program is specifically for the investment properties. That's the major concern. WMB programs should be ND1, NODOC 1, and NODOC 2 will be compared with a DSCR product, whether we have a credit or not. But this is only for the primary residence. So how I sell is I tell people that I originate hard money on a primary residence homes.
Yeah.
Then I don't have to question too much about the fee. Everyone knows hard money fees are expensive. So you can only focus and transact with a hyper-focused, hyper-intentional people.
Yeah.
Realtors love it. I'm doing another one, a $3 million deal, and I'm getting an exception right now. Irvine, especially, Yorba Linda, if you go for more expensive, like Old Town Tustin, there are plenty $1 million plus transactions just floating around because rates are so high. We're only like 1% apart from the full doc loans right now. High Bell full docs are in like high 7s and low 8s at this time. So don't be scared. Don't be discouraged. Throw it out there. That if you have any XYZ, you know, and for those buying those expensive homes, don't care about these. They just want the loan amount. Surprisingly. Or at least that's what I'm getting at. So let's shoot out. Minimum loan amount, what Ragnar is showing is only $100,000. So that's another easy thing.
Yep. Thank you. Thank you. Yeah. So I wanted that's what I was actually looking for was the minimum loan amount is $100,000, right? So we're not thinking, guys, here like you have to do these $1 million deals. If you have someone in the high desert, if you have someone in, you know, like Victorville, Palm Springs, or Murrieta, or Hemet, right? San Bernardino, Lancaster, heck, even Santa Ana, that's looking for a $500,000, $600,000 house, right? Let alone a $400,000 house in the desert. And they only need like a $300,000 loan. As long as they have 25% down payment, guys, it's a no hassle loan. Now, I do want to give some color and some explanation as to how is this happening, guys? Like, you know, what is this? Is this legal? Is this, you know, is this something kind of shady? And it's not, okay. I lost, I think it's up there. Okay, I think it's up here. So it spells it out here first in the name, right? Community mortgage. So what is that? Okay, so in short, okay, in short, if a lender, okay, or a bank more so, hasn't or didn't basically serve, okay, or transact by helping enough of the low to moderate income families or certain races, okay, they are in violation of the CRA Act. Okay, CRA is Community Relations Act. And here, I will show you that real quick. CRA Act. Okay, so here, this is right from Google, guys, so you can read it, right? Community Reinvestment Act is a federal law that encourages banks and saving associations to help meet the credit needs of communities they serve, especially low to moderate neighborhoods. Okay, so and it goes on, and you guys can read it, but it's part of the CRA Act. Every bank, Wells Fargo, Chase, Citi, all the banks that you know, they are required, okay, to meet a certain requirement in servicing the underserved. And when they don't, they basically have to take their profits, okay, and put it back into the communities. Okay. Case in point, Citi right now, okay, Chase is offering like a $7,000 closing cost grant. As soon as your loan closes, they're going to give you $7,000. Chase. Citi, I think, is offering $50,000. Okay. C, who was your former lender and who was it again? That's offering the
My former employer,
Yes.
City National Bank,
And how much are they offering?
$20,000.
Okay. So City National right now at closing will issue $20,000 for the borrower to use towards closing costs and other down payment. Okay. So these banks do these once in a while. Okay. Change is no different right now. Change is this is part of their CRA, if you will, violation, and thus they are having to they're creating loan programs to reinvest back into the community. This probably won't be around forever. Okay. And so, the one thing I will share with you guys that I learned here through Giving Tree, through Peter's tutelage, is this old adage, and you guys have all heard this. Okay. Go where the money's at. Okay. Go where the money's at. Guess what? I can tell you right now, and this is not good news. Okay, but we here at Giving Tree and a lot of other lenders right now are losing deals because borrowers right now are taking advantage of these grant programs given by the banks. Right? It's just a fact. There's no reason to hide it. Okay, and shy away from it. We are losing deals because there are lenders who are giving away free money right now. Okay, and guess what? That's where agents are going to go to. Right? Because it helps them with their business. They are going to where the money's at. And for us as loan officers, we have to learn that as well. It's a skill, honestly, but it really is just a mindset. Okay. When the refinances boomed just 2 months ago and rates were in the high fives, even conventional, well, what did we as loan officers have to do? Make calls and say, hey, client, you want to refinance? Rate is the lowest it's been in 2 years. Let's refinance. You have an 8%. What are you doing? Right? I had the fortune of closing a couple myself, right? VA IRRRLs. There is a time and place for a lot of different programs. Yes, you have to do your daily bread and butter of knowing what a mortgage is, how to sell it, conventional loans that will always be here. But every season, every cycle or so, there are time and a place where money is more ample. You have to go and flock to it. Okay, I don't think Change is going to be doing this for a very long time. I don't know how long, but all I can say right now is it is sure as heck helping me with a $1.5 million deal right now, right? If I charge 2 points, guys, guess what? I'm making $30,000, right? You charge 5 points, you're making $45,000. That's someone's annual salary, right? So go where the money is at. If you have any questions, I will send this out right now, the guidelines. You'll have to go onto their website to get the rates for this program specifically. I'm going to leave you guys with this. There is a 1 point mandatory lender fee, not our fee. It's Change Wholesale. They charge 1%. Okay. And then on top of that,
for rates, Ragnar, or
I'm sorry.
do we need login credentials for rates?
No.
But the rates are as 9%, 9
Yes.
to 9.25.
Yeah.
When you want to go down below 9, there's a discount point on top of 1.
Yeah.
So 8.5 will give you 2 points, and 0.25% increment applies on every step.
Yeah.
So 9.25 is at par.
Yeah.
Par represent 1% discount point to the lender, or 1% fee to the lender.
And then just to clarify again, there's no prepay on this, right?
No,
No.
but there's an EPO of 1 year.
Oh wow.
And
Okay.
0.5, 0.5. So make sure you charge enough money up front. Don't be shy. They need the money. Yes, we typically charge 2 to 5 points.
Okay.
So we don't have to be shy. Not that many people can do this anyway.
Got it. Thank you, Peter.
Yeah, if you just go onto their website, here, you want me to show it to you real quick, or you guys got it? Here, I'll just share it. Change wholesale rates, share. It's this. Okay. If you go to the non-QM rate sheet, you just click it. It's here. You scroll down, and right there. Okay. Any questions, guys? So who would have thought, when Peter shared this about a month and a half ago or so, that I would need this, about a month ago, that I would need this, right? And it turned into, I thought I was doing something amazing. So initially, guys, I was actually, for my clients, thinking of doing a commercial loan. So I was reaching out to commercial lenders, right? Hey, I have someone who wants to buy a gas station from their brother. Oh, we could go SBA. It's only 10% down. And I was wasting my time. One, a lot of lenders right now don't want to touch gas stations, okay, because of all the insurance costs have gone up the roof and whatnot. And then I was like, oh, well, let's do a cash out. And I thought I was being very creative, right? Oh, we can move in. Oh, so the second thing I didn't share with you guys was I was going to make this a purchase transaction. I was going to have the daughter outright buy the house from the mom, okay? But it wasn't going to be enough income. Because if I now purchase it, I can offset it as a primary or a rental, right? Pay everything off. But then we found out that the loan, instead of being 1 million, it's 1.3. So we needed more income. And thus, this community mortgage is saving the livelihood of this entire 3 families now. Okay, so that is that. Again, I'll send out the matrix after the phone call. Peter, I leave it up to you.